3 times in the last 5 centuries, a global superpower has collapsed, not from military defeat, not from revolution, but from the mathematics of unsustainable finance. Each time, the collapse followed the same pattern. Each time, leadership dismissed warnings. Each time, they believed their situation was different, their currency special, their dominance permanent. They were catastrophically wrong. In the 1640s, the Spanish Empire controlled more wealth than any power in European history. Silver from the Americas flowed into Seville in infinite quantities. The Spanish real was the currency of global trade. Military dominance was unquestioned. Within 80 years, Spain was hollowed. Currency imploded. Military unpaid. The empire became a cautionary tale about confusing monetary abundance with productive wealth. In 1945, the British Empire encompassed a quarter of the world's population. Sterling anchored global finance. London was the center of international banking. 30 years later, Britain negotiated IMF bailouts. The empire was dismantled. Currency lost reserve status. The nation that defined the previous century watched its influence evaporate in a generation. In 1985, the Soviet Union was a nuclear superpower with global reach. It controlled half of Europe, influenced governments across continents, maintained the world's second-largest economy. Leadership spoke confidently about surpassing American production. 6 years later, the Soviet Union no longer existed. The ruble became worthless. The empire dissolved. Superpower status vanished faster than anyone thought possible. 3 empires, 3 complete collapses, 3 demonstrations that financial overreach destroys even the most powerful states, and the United States exhibits every warning sign that preceded those collapses. Welcome to Silent Economy. Imperial collapse isn't gradual decline over centuries. It's systemic failure within a generation. An empire at its peak controls resources beyond borders, projects power globally, finances this through productive capacity and financial engineering. Currency is trusted, bonds are purchased, commitments are honored, but maintaining empire is expensive. Foreign bases, distant fleets, alliance subsidies, wars draining treasuries, and populations expecting rising standards while contributing less to output. Initially, costs are manageable because the empire is productive. It creates value, it innovates. Currency strength reflects economic reality. Then comes the transition. The empire finances reach through financial manipulation rather than productivity. It prints currency to fund commitments it can't afford. It borrows from future generations. It debases the monetary unit while maintaining the fiction of stability. This creates the imperial debt trap. The trap works like this. The more you finance commitments through monetary expansion rather than productivity, the more you must expand to maintain confidence. Each commitment requires more currency creation. Each creation erodes purchasing power. Each erosion forces more commitments to maintain appearance of strength, a self-reinforcing cycle that accelerates. Once in this trap, there are 2 exits. Reform requires admitting unsustainability, withdrawing from commitments, accepting reduced global role. No empire has chosen this voluntarily. Political costs are too high. The public refuses reduced circumstances. Leadership clings to belief that one more intervention will restore stability. So they choose the second exit, collapse. Or more accurately, collapse chooses them when mathematical reality can't be postponed. Spain's collapse illustrates this pattern. The problem wasn't resources. Silver from Potosi flooded Seville year after year, but Spain spent it on consumption and military adventure rather than building productive capacity. They imported goods rather than manufacturing. They funded endless campaigns, generating no return. Silver flowed in and immediately out, financing foreign consumption and wars. Spain became wealthy in monetary terms, while poor in productive capacity. When you produce nothing but possess vast money, money without productive backing becomes worthless. The crown repeatedly debased currency, mixing copper with silver. Each debasement funded another year of war, imports, living beyond means. Each eroded currency confidence. Markets called the bluff. Merchants refused Spanish coin or demanded discounts. Creditors demanded impossible rates. Military went unpaid, leading to mutinies. By the 1640s, Spain defaulted while sitting on silver that could purchase nothing. Monetary abundance without productive capacity leads to ruin. When the medium lost credibility, exchange stopped and empire collapsed. But that lesson wasn't learned. 2 centuries later, Britain made the same mistake with different mechanisms. Britain's empire was built on genuine productive advantage. The Industrial Revolution gave Britain manufacturing capacity dwarfing competitors. British goods dominated markets because they were superior and cheaper. This made sterling valuable. Reserve status reflected economic reality. But empire corrupts productivity over generations. Why invest in efficiency when you can extract wealth from colonies? Why innovate when you control markets through administration? British productivity eroded. Germany's industry became more efficient. America's manufacturing more cost-effective. Britain's advantage shifted from production to finance. This worked until World War I consumed resources catastrophically. Britain borrowed massively, primarily from the United States. After the war, rather than accepting this reality, Britain attempted to restore sterling to pre-war gold parity. This required brutal deflation when the economy needed stimulus. The choice was stark: accept sterling's value had changed, or sacrifice domestic economy to maintain currency prestige. Britain chose prestige. The 1925 return to gold made exports expensive and imports cheap. Industrial base hollowed. Unemployment soared. Economy stagnated. When crisis came in 1931, Britain abandoned gold within days. The fiction of sterling's special status evaporated. Within a generation, currency lost reserve status. Unable to project financial power, the empire began rapid dismantlement. The pattern repeated with the Soviet Union. The USSR operated through central planning and commodity extraction. Soviet productive capacity in the 1960s was genuine. The space program matched Western capabilities. Heavy industry was massive. Growth rivaled capitalist economies. Leadership believed they'd achieve superiority. But central planning created perverse incentives. Managers met quotas by producing goods with no practical value. Innovations were suppressed. Investment flowed to prestige projects rather than productivity. The economy became rigid and inefficient. Soviet leadership papered over problems with oil revenue. When energy prices rose in the 1970s, petrodollars flooded in. This funded imports, subsidized satellites, maintained military parity despite economic inefficiency. The system became dependent on high oil prices. When oil prices collapsed in the mid-1980s, revenue vanished, but commitments remained. The response was to increase extraction, cut investment, maintain the facade, while the foundation crumbled. By 1989, the system ran on fumes. When political control cracked, economic collapse was instantaneous. The ruble became worthless. The superpower dissolved because it couldn't finance commitments defining its status. 3 collapses, 3 eras, 3 systems, 1 pattern. The imperial debt trap operates the same way. First, the empire extends beyond what productivity can sustain. Second, it finances gaps through monetary manipulation. Third, this creates dependency requiring continuous expansion. Fourth, productive capacity erodes. Fifth, the trap closes. Commitments are enormous, productivity insufficient, currency loses credibility. Only options: reform or collapse. No empire chooses reform when possible. Reform requires admitting unsustainability, withdrawing from commitments, accepting reduced status. The system can't process this while appearing functional. Leadership pursues one more intervention, so they choose collapse by default. Spain collapsed when markets rejected the silver system. Britain when the sterling gold peg became unsustainable. Soviet Union when oil revenue couldn't paper over inefficiency. Mechanisms differed, outcome identical. And now we're watching the United States exhibit every warning sign that preceded those collapses. The US maintains unprecedented global military presence in human history. Bases and facilities in more than 70 countries. Naval forces deployed in every ocean continuously. Security commitments and treaty obligations spanning multiple continents. The financial cost of maintaining this global military infrastructure is extraordinary and growing faster than the revenue to support it. The US runs persistent, massive trade deficits year after year, decade after decade, importing far more than it exports. This gap represents consumption beyond productive output, and it's financed by selling debt to foreign creditors who accept dollar-denominated bonds. The US currency maintains global reserve status, but increasingly, this status rests not on productive superiority, but on inertia and lack of obvious alternatives. The dollar is used in international trade and held in central bank reserves, primarily because it has been used historically, not because American productive capacity dominates global markets the way it did in 1950 or even 1980. The federal debt now exceeds $36 trillion. Annual deficits consistently run above $2 trillion, even during periods of economic expansion when deficits should theoretically shrink. The fiscal trajectory is mathematically unsustainable by any honest measure, yet spending continues increasing while tax revenue remains structurally insufficient to close the gap. The productive manufacturing base that once defined American economic dominance has systematically eroded over decades. Manufacturing shifted to Asia, particularly China. Innovation and investment concentrated increasingly in financial engineering and technology services, while tangible goods production declined relative to consumption. The persistent trade deficit directly reflects this structural shift. America consumes vast quantities, but produces relatively less of what it consumes. Social cohesion and political unity continue fraying. Political polarization has intensified to levels not seen since the Civil War era. Trust in core institutions deteriorates year by year. The domestic social foundation that ultimately supports global commitments and projects' power is weakening precisely when those commitments are expanding. These are not predictions or interpretations. These are observable, measurable, documented facts. The question is not whether these dynamics exist, but what they mean for the trajectory we're on. And what they mean is that the United States is deep inside the imperial debt trap. Military commitments exceed sustainable funding. Gaps are financed through deficits. Deficits require foreign creditors buying treasury bonds. Creditors buy because the dollar holds reserve status. Dollar maintains status because of perceived dominance. Dominance requires funding perpetuating deficits. Every element depends on every other continuing. This worked because American productivity was unmatched, and the dollar had no alternative. But both conditions are eroding. Chinese manufacturing dominates production. European integration continues. Regional trade bypasses dollar settlement. The U.S. maintains position through continuous monetary expansion. Federal Reserve creates currency to purchase government debt. This funds deficits maintaining commitments. But monetary expansion has consequences. Each dollar created dilutes existing dollars. Inflation erodes purchasing power. Currency weakens against commodities. Real wages decline while nominal debt grows. This is the trap. Stop expansion and commitments become unfundable, forcing crisis. Continue expansion and currency loses credibility until crisis arrives anyway. Both paths lead to the same destination. Spain chose expansion through debasement until markets rejected currency. Britain chose defending value until pain forced abandonment. Soviet Union chose maintaining facade until system imploded. The U.S. is choosing expansion. Deficits accelerate. Monetary creation continues. Commitments expand despite declining productivity. The prevailing belief is that American exceptionalism will prevent this pattern. The dollar is different because it's the dollar. The position is permanent. Mathematical rules that applied to Spain, Britain, Soviet Union don't apply here. This belief is identical to what every previous empire told itself. Spanish leadership believes silver guaranteed strength. British leadership believed sterling's status was ordained. Soviet leadership believed central planning would surpass markets. Every belief was wrong. Confidence in exceptionalism didn't prevent collapse. It accelerated it by preventing reforms. The mathematics are straightforward. The U.S. borrows $2 trillion annually at rising rates. Debt service rises faster than revenue. At current trajectory, interest alone will exceed all discretionary spending within a decade. This forces three options: cut commitments dramatically, raise taxes massively, or monetize debt through inflation. The political system can't choose the first two. Default will occur through the third, currency debasement. When creditors realize debt will be repaid in degraded currency, they'll stop lending at affordable rates. Interest spikes. Deficit widens. Monetization accelerates. Currency loses confidence. This is the end game. Not military defeat, not revolution. Financial mathematics forcing adjustment. The political system can't manage. The pattern suggests transition will be rapid. Spain's collapse took 60 years, but acute crisis compressed into a decade. Britain's reserve currency loss took 30 years, but the break happened in days. Soviet dissolution occurred under 1,000 days. Collapse isn't gradual. It's punctuated equilibrium. Long stability, interrupted by sudden failure. Warning signs accumulate slowly. Crisis arrives quickly. We're watching signs accumulate. Deficit expansion, monetary creation on impossible scales, productive capacity declining, social fracturing, commitment overextension. Together, they constitute the pattern that destroyed every previous empire exhibiting it. The US could still choose reform. Productive capacity exists, though diminished. Resources available, though misallocated. Population educated. Infrastructure degraded but functional. Reform would require acknowledging unsustainability, withdrawing from commitments, allowing currency to reflect actual capacity, accepting reduced role. Most painfully, requiring population to accept lower living standards short-term for stability long-term. No political faction is proposing this. The entire conversation remains within maintaining empire through expansion. No serious discussion of whether the approach is sustainable. This is how empires collapse rather than reform. Not because reform is impossible, but because it's politically impossible to discuss until crisis forces it. By then, adjustment is far more painful. Spain, Britain, Soviet Union faced this choice. All chose to maintain fiction until reality forced correction through collapse. All told themselves they were different. The pattern is mathematical. You can't spend beyond means indefinitely. Can't maintain empire without productive capacity. Can't debase currency without consequences. Can't avoid late stages after proceeding through early stages. The question now is timing. Maybe 10 years before crisis begins, maybe 5, maybe less. But the pattern says collapse is coming. When it arrives, it won't be slow or gentle. Currency crisis triggering debt crisis, triggering political crisis. Superpower becomes cautionary tale. Reserve currency becomes regional. Empire becomes memory. The pattern completed 3 times. It says we're next. Everything since 2020 suggests we're accelerating. If this analysis showed you something you weren't seeing before, if you're recognizing the pattern in real-time events, subscribe to Silent Economy. Because what happens next follows a script written 3 times. And when the debt trap reaches final stages, you'll want to understand exactly what you're watching and why. The signs don't hide. They require knowing where to look. I'll show you where to look. This is Silent Economy.